Now we're going to put the spotlight on a new age company recently listed on the Lal Street, which is bucking the trend. Yes, the stock price is not going down, it's going up. In the last 1 month, in fact, the stock price is up 20%. I'm talking about Rategain. What's happening at this travel and hospitality SaaS company? Why is the stock markets preferring Rategain over others? Here's the founder CEO, Bhanu Chopra. Hi there and welcome to this ET Now special. I'm Nayantara. Today I've come to the corporate headquarters of Rategain. It is one of those new age companies that recently listed on the Lal Street. But unlike the others, Rategain is different for many reasons. One of the big ones being it's already profitable. In fact, in the last quarter results, its profits had quadrupled to nearly 17 crore rupees. What we've also seen recently is Rategain outperform the other tech stocks. So while the others are languishing, we've seen Rategain actually being 25% in the green for the month gone by. And now I'm going to be in conversation with the founder, Bhanu Chopra. Bhanu, thanks so much for inviting us.
Thank you.
How does it feel? You're beating the likes of Nykaa, Zomato, PolicyBazaar. They're still very much in the red, underperforming what we're seeing on the NASDAQ, but Rategain doing better?
Yeah, absolutely. It feels good. In fact, I actually look at my NASDAQ portfolio, and when I open it up, those are the days when I feel much, much better, given my portfolio is down 40% and the stock is now down 10%. But look, it's beyond the stock price. We listed the company, and now it's really about the execution of the promises that we made to our investors. So, keeping our heads down and executing, and very, very pleased with how the last years really went. I mean, we promised
I must say this, don't observe it, that when we look at a Paytm or a Zomato, PolicyBazaar, Nykaa, and the way the stock price is languishing way below the IPO price, you're playing catch up. I think there's now about a 10% delta.
Yeah, it's about 10%. But like Nayantara, I was saying, when we came into the market, we said that, we are going to be growing the company. So we guided for about 30% growth, about 10% EBITDA margin at that point, and we guided for like 200 to 300 basis point expansion. But we exceeded those numbers. So if you look at our quarterly numbers, we're doing over 50% growth, and our last quarter EBITDA margins were 15%. So look, what I've come to realize, it's very, the adage of saying the beauty lies in the eyes of the beholder. What I can do is really, really execute on the promises that we made, and we leave it to the investors on how beautiful they find our company and the growth potential, and it's ultimately a function of demand.
But what we've also seen, and this is being applauded by the Lal Street as well and the investors, that Rategain has been on an acquisition spree. A bunch of them have been announced. On January 10th is this year, you've closed a big one, an American one, of about $16 million. And that's what the markets have really liked. What is so special about this acquisition?
So Adara is very, very complementary to what we do. It's in the MarTech area. And what they have done is built like a data consortium, a global data consortium of all the travel, hospitality, and travel brands, where they share their data on the search traffic on their sites, on the profiles. And so they have partnerships with 275 top global travel and hospitality companies like United Airlines, Marriott, Accor Hotels, Trivago, Kayak. So we have some very, very rich marketing data that can be very, very useful for marketers on how they strategize. And if I look at our existing DaaS and MarTech offerings, it adds an intelligence layer on top such that these marketers...
Please speak in language that all of our viewers will understand. So MarTech has to do with marketing, and SaaS, think of it as data and distribution. Yeah.
So MarTech is really around solutions to help marketers to get the maximum bang on their buck on money they spend digitally, right?
So you're the guy all of our viewers should go after if they've been spammed by Booking.com, Sky Air, and all of those Marriott, etc.
So look, we are facilitators in helping them get the maximum bang on their buck. So basically, every dollar that they spend, we try to maximize the return on that investment by driving traffic to their website. And so what Adara, going back to Adara, what it does is it has this comprehensive travel intent data. So let's say you're making plans to go to London, and you go on multiple websites, whether it's a Make My Trip or a booking or a kayak or a Trivago. So we're capturing that data, and we know Nayantara has now intent to go to London. So we take those cohorts of travel audiences and give it back to our customers such that they can have much more intelligent advertising, which ultimately leads to a better return on ad spend. And so it's very, very complementary. The company has been around for a long time, but because of COVID, as you know, a lot of travel and hospitality companies couldn't survive. And this company, Silicon Valley cost structure, COVID happened, we're at 100 million revenue, went down to about 20 million. And then when we acquired, they were run rating at 27 million. And there is a huge opportunity now because they took a lot of debt, and we obviously helped clean the balance sheet out.
But is this acquisition EPS accretive from day one? I saw there's an 11%, I read some analyst reports, there's about an 11% overlap as well when we talk about the revenues.
That's correct. So as I was mentioning, there was a bit of financial stress that the company went through which a lot of our companies in the industry went through given COVID, and Rategain itself went down to almost 15% of our pre-COVID revenue levels when everything was locked down around us. So we were able to sort of capture back as the revenge travel happened, but in Adara's case, they struggled a little bit because they had retrenched staff, and it was difficult to get back everybody, and they'd taken on some debt. So the company, when we acquired, was still making a little bit of losses, but not as much. So our target within the 90 days is to break even, and then post that get to a run rate of 10%. And what we've guided is over the next 12 months, we'll get to sort of like a 15% growth and 15% EBITDA margin. And I feel those are very, very conservative numbers because, as I said, the company was at 100 million, came down largely because of COVID. So there's a huge opportunity, and there is, just tremendous potential in terms of cross-sell, upsell capability, because we, like you said, we have an 11% overlap, but the overlap was much larger when they were at 100 million.
Okay.
Because they focused largely on travel and hospitality as well. And so, we work with all the large hotel chains that were their now ex-clients. So the goal is that we go back to those clients and reactivate a lot of those relationships. So I'm very, very excited. I mean, there's empirical evidence, right? So if I tell you the 3 different offerings that we have, and if I tell you each one of them can be 100 million, there's a lot of convincing to do, but in case of Adara, it's already proven.
It's already proven, yeah.
It was a $100 million business 2 years ago, and now we can sort of, hopefully within the Rategain family, help it retain its glory and help it grow much faster.
So Bhanu, can you now also tell me something, because you obviously did something right during COVID, now you're flexing your muscles, you are very different from other tech companies that you're already profitable. And with that, I'd like to ask you one thing. Now, unlike others that were listed recently, which are coming out with their timelines on when they're going to be profitable, what are your timelines? And you've been busy meeting all analysts all of January. Since you're already profitable, is it growth at any cost? Are you going to take your eyes off the bottom line? Or are you listening to the market and saying, no, I've got to only look at my bottom line?
Yeah. Well, look, I do have to give you this context. There has been a little bit of training and a change of focus when you go from being a private company and to public markets, because the private company investors are all about growth, and when we sort of entered public markets, it's a lot about profitability and expansion of margins. And so what we really like to follow is the general rule of 40, which is the EBITDA percentage, sum of EBITDA percentage and your growth percentage. So if you look at our rule of 40 right now, we're actually exceeding, about 65. We're at 65. So we are far exceeding that rule of 40. So, going forward, what we've been guiding is we'll continue to focus on 30% growth. and 200 to 300 basis points margin expansion, because the beauty of a SaaS business is that the operating leverage begins to kick in. So we will be announcing our quarterly earnings. So we had a very, very good quarter in terms of new bookings. So every incremental dollar that we add, flows to the bottom line, and so I'll continue to reinforce.
So in the quarter that ended in September,
correct,
we've seen profits quadruple to about 17 crore rupees. What can we expect? Now the base will be higher as well?
Yeah, I can't get into the specifics, but I can promise you that given the trajectory that we have, given the business growth, the new bookings, the momentum we have in the business, and with our plans on how we intend to turn around Adara as well, I think the profits will continue to go up. I can't share.
You won't give me the
specifics.
quantum, but it's going
Yes.
up. Okay, that's important. Bhanu, the other thing I wanted to ask you is that you've obviously got the tailwinds, or what we all call revenge travel, right? It is a thing. I think it's been established. It is a thing. Business travel has started to come back, maybe not as much as earlier. More than 50% of your business is outside of India. It's from North America, actually. What are the trends that you're actually seeing?
Yeah, so actually, Nayantara, we focus between one dimension is looking at the leisure business, so a leisure traveler versus a business traveler. So Rategain solutions are largely focused on helping our customers cater to the leisure traveler. In fact, 97% of our businesses. And what has been a positive surprise for us is that business travel has rebounded. So we are seeing an uptick in that part of our revenues, although because its proportionate share isn't large, it's not, sort of moving the needle. But generally speaking, if you look at all our customers, the big hotel chains, the big OTAs, they had record numbers in Q3.
Yeah.
The one that ended in December as well in terms of revenue, record revenues, record profits. So we're not actually seeing any let up. There is continued robust demand, and I think what's also been really, really positive is now China has relaxed COVID norms. So we are seeing, incredible amounts of potential there. In fact, we released an Adara report just today, which talks about, what's the Chinese traveler going to do in the later half of the year, and it's suggesting that it is going to have a very, very meaningful impact on the overall travel trends, because, China has
What about
opened
Indians?
Up the Indian revenge travel started to kick in last year, and I think, even though there is talk about recession and inflationary pressure, I'm sure if I ask you what are your 2023 plans on big purchases, I'm sure travel is on top of the list. And even the consumer surveys that are being done, people are, when you talk about discretionary spend, COVID has changed people's attitudes, right? They don't want to buy that extra TV or car. It's all about experiences, and travel.
We don't take anything for granted anymore.
Yeah. So travel is such a big part of it. So I think in terms of what we see right now, it is continued robust demand. But look, what 2019 and 2020 taught me is anything can happen. There is a whole degree of uncertainty in the world. So we don't take anything for granted. We keep a close eye and ears on the ground. And,
but
like
when you do that, can we expect more acquisitions? You've really been on an acquisition spree, I think 5 or 6 in the last few weeks.
Yeah, I think you really want me to reveal all the cards here. But no, look, on a serious note, M&A is going to be continued to be a big part of our growth strategy. As I have talked about, our ultimate vision is to be the biggest travel and hospitality tech company, and the TAM is.
So you want to be
significant.
like the Salesforce for travel and hospitality? With a lot more than just what they do.
I wouldn't say Salesforce. I think a better example would be Shopify, which is about helping our customers acquire guests, retain and engage them, and have a wallet share expansion. So, an all in all, one holistic platform.
From car rentals to hotel properties to all of that.
And our focus continues to be, within even the travel industry, the hotels and lodging, that's 80% of our business. Because when I look at everything that we do, we haven't even scratched the surface. Our penetration, we're talking about almost a $7 billion TAM for what we do today. I mean, that could expand as we add more capabilities.
TAM is targetable addressable market.
Yes. So we are at, if you look at our revenues now close to about 100 million, we are not even scratching the surface.
No.
So the goal is to continue to penetrate in what we do, continue to add capabilities in adjacent areas. But, to give you the example, I think of us trying to be the Shopify of travel.
As we come to an end of this interview, so this is a very interesting anecdote, ladies and gentlemen. Why did you IPO?
Yeah, so
it wasn't because of the balance sheet. It wasn't the herd mentality either.
Yeah. No, so the inspiration actually came from my son.
This 16 years old?
Yeah, 16 years old. So we were in the midst of COVID, and both of us were locked out of the house. We were staying at at another house of ours, and he made a presentation to me on how, given the situation in India, that as a family that we should move to UK, and I'm like, we're not moving to UK. And then he made a subsequent presentation to get him to move to a boarding school in UK, and I was just very amazed with the fact that we were both under COVID, and we'd had some casualties all of us did in our family as well. It was a very depressing time, and for him to think of such a transformative move, it sort of gave me the inspiration to think about transformative things, and the IPO idea occurred to me, and very pleased with what we were able to achieve. I think the Rategain team came into action, and was really June of 2021 when we put the ball in motion, and by December we were listed.
Any regrets?
No, I think it's been a great experience. There's a lot of learning. Earlier we had 2 investors, now we have 70,000 investors on our cap table, so it's a huge amount of responsibility, and talking to so many people in the public markets. There is lots of learnings on best practices across different industry, and I think it's been a very, very enriching experience.
And with that, Bhanu, thank you so much for giving us time. Great to be here.
Thank you. Thank you so much.
In association with Signature Global, making India affordable.
When time